So the Ethereum merge will go live in the next few weeks, and it's arguably the most significant blockchain transition in crypto's history. While the merge will provide some amazing upgrades to Ethereum's network, many investors have mixed feelings and don't know whether to be excited or nervous about the impending changes. Some skeptics have described the merge as replacing a planes engine mid-flight, while proof-of-stake bulls have called the transition necessary and an absolute game changer for the future of Ethereum's network. Either way you see it, you have to admit that there's a lot to consider here, and the outcomes following the merge aren't so straightforward. Pretty much to sum it up, this video is going to be whether or not Ethereum is actually going to crash, whether you should get out now, and what you should expect moving forward over the next few weeks. So to kick this video off, as we approach the merge, new money has been coming into future markets more than ever. Open interest right now is a measure of how many positions in futures are open at that time and represents the amount of capital currently invested into futures. So according to some data that we're getting from Kaiko, the open interest right now is denominated in Ethereum and is showing us that right now the future positions available are at a staggering all-time high, acting as a massive leveraging force on the price action of Ethereum for the next coming weeks. As you can see on your screen, the open interest in Ethereum is at that all-time high, while we're seeing the price action not reflecting it, being a fraction of what the charts are representing. So as we approach the merge, funding rates have dipped sharply negative to close out August, and this large dip here combined with the surplus in open interest suggests that the majority of new money entering the futures market for Ethereum right now is short biased. Okay, so if you're asking yourself the question, why are many crypto investors shorting Ethereum futures as we're nearing this merge, and are all investors pretty much just being bearish at this point? For one, some investors could be shorting Ethereum because they're betting that there might be an unsuccessful transition from proof of work over to proof of stake. And if that happens, we could be seeing another massive price dip happening for Ethereum. Another reason could be that investors right now are hedging their long spot Ethereum positions by shorting an equivalent amount of ETH using perpetuals on a centralized exchange or a decentralized exchange. If Ethereum 2.0 becomes a class example of buy the rumor, sell the news, investors who hedge their long spot positions will have taken on some risk off the table by playing both sides of it. I know it sounds a little counterintuitive, and the easiest way for me to explain this is if you're going to the casino and you're playing roulette, instead of betting just on black and going all in, you're betting on black and red at the same time. If you're asking yourself, why would anyone do this within the market? It's because if you're initially just over leveraged or you have too much invested before you even thought there could be an opportunity where Ethereum does not have a successful merge, you could take some of that risk off the table in the future. Now, there is one main difference here though. By going long spot on Ethereum and shorting the futures, investors are still eligible right now for receiving an Ethereum proof of work airdrop. Now, a lot of people don't know about this, and if you guys don't know either, make sure you listen up, because there's a possibility that if you are holding Ethereum, you could be eligible for a free airdrop, which just means you're getting some free cash on the side. By going long on Ethereum and then shorting the futures, users are now being able to get exposure to Ethereum so they can still earn the airdrop while not taking on the full price risk that comes with holding the asset. This strategy here is going to be profitable if the value of the airdrop exceeds the cost of keeping open a futures position. Now, if you don't really know too much about airdrops, just think about it as a potential dividend for having long spots on Ethereum. Just like how major stocks pay out dividends to their investors, airdrops can be one way that they award their long-term holders for an asset by giving you just a little bit of cash on the side. The big thing to note here, and the reason why I had such a drastic title, is because as we're getting closer to the merge, a lot of investors are forgetting the fact that there are rumors right now circulating that there's indications of an Ethereum proof of work hard fork that may be taking place. If you got a fork with only like two prongs, I know it's like a pitchfork, but it's basically when within a crypto project, there isn't a decision that's able to be made. There's two ways that they can go. There's proof of stake, proof of work. When the network is not able to all transition to one side and they go the other way, that's when we see those forks happening. We've seen forks happening before in the past with Ethereum that we have now, and then Ethereum Classic. We've also had forks happen within Bitcoin as well. Now, the reason a fork might happen is just the fact that Ethereum's mining is a multi-billion-dollar industry generating hundreds of millions of dollars in revenue to hardware miners every single month. Now, after the merge is completed, hardware miners are effectively going to be useless. Now, to believe that these miners are simply just going to shut off their machines after the merge, give up billions of dollars in revenue, and go quietly into the night, it just is a little bit unrealistic. So the potential fork to be looking out for is a fork called Ethereum Proof of Work, or Ethereum POW. This seeks to split out from the Ethereum core network and is led by a miner by the name of Chandler Gu. So Gu asserts that the fork is going to permit here miners to carry on with their work even after Ethereum switches over to that proof of stake consensus model. Now, in order for this to happen, they're going to need to create two different blockchains, each running its own set of protocols and coins. The proof of work miners are looking to fight for their businesses and fork Ethereum to push for a proof of work alternative. And after the merge, every Ethereum holder is going to be holding those Ethereum proof of work tokens 1-to-1 for every Ethereum held at the time of that merge. So a lot of people in this instance right now are comparing Ethereum's hard fork with the success of what we saw with Bitcoin. But just as a reminder, Ethereum and Bitcoin are two very different ecosystems. When it comes to Bitcoin, all Bitcoin had to do was fork and everything just moved forward from that point on. But when it comes to Ethereum, you have to realize that you have all of these decentralized applications living within their platform. So if you have two different types of Ethereum, how is that going to work out? How is it going to work out with the DeFi projects, the NFT projects, OpenSea, and etc.? There's just a lot. So simple answer is that if Ethereum forks, then all those decentralized applications are going to need a fork and they're going to have to choose which network they're going to reside on. This is going to include hundreds of asset providers and bridging protocols to honor claims on user assets. Now, this here could lead to a very chaotic week following the merge and heavy price volatility, including Ethereum 2.0 and the new Ethereum proof of work token. Given this battle between Ethereum miners and proof of stake advocates, some large crypto companies right now are choosing their side before the war even ignites. We have OpenSea, the largest NFT marketplace, recently tweeting that they will exclusively support proof of stake NFTs on Ethereum to provide the smoothest transition possible following the merge. Circle, which is the company behind USDC, the stablecoin, followed OpenSea and also announced that it plans to support the upgraded Ethereum proof of stake chain fully. We also have the crypto exchange Bitfinex, on the other hand, that said it would provide traders with options should the merge cause a fork. Now, Coinbase also stepped into, and they're signing just on both sides, stating that we're going to consider supporting Ethereum proof of work fork following the merge, and their goal is to just level the playing field for all new assets. And I think at the end of the day, Coinbase and a lot of these exchanges, they just want to make as much money as possible, but we are going to have to see a lot more of some of these other companies which are more definitive within the NFT or DeFi space to choose a side. I think it'll be more beneficial for us users at the end of the day if they do go for the proof of stake or Ethereum 2.0 rather than the latter. This is because we're going to get less transaction fees when we get more and more upgrades happening within the future. And where at one point when the Other Deeds NFT came out and I was paying $6,000 in gas fees for a single mint of an NFT, no one should ever have to deal with anything like that again. No one should ever have to pay a transaction fee that far exceeds the cost of the actual asset. And I know a lot of people have been burned before in the past just because of how crazy gas fees got. If we continue to fork and stick with the old ways, we wouldn't be seeing the emerging technology and the upgrades that we need, where we would see improvements in prices such as that. So to give you my thoughts, just to, a little summary, a little Jung thoughts for y'all, this is going to be an insane month for Ethereum. If the merge does happen to transition smoothly and is widely adopted by everyone, you should expect to see all future short positions getting closed out or liquidated, which could result in an Ethereum short squeeze happening, where before in the past, guys, short squeezes, even within crypto, what we saw with even the Celsius token, just look at some of the price action for that. Short squeezes are nuts. And I do think if Ethereum has a gamma, just ultra, I don't even know, Super Saiyan Kamehameha level 3 short squeeze, it could just result in a price action that many people would far exceed expect. With Ethereum currently sitting at $1,500, not having too much crazy price action, let's pull it out to the 1 month charts. We had the coolback period, we had the pullback, even in the last 3 months with Ethereum going near as high as $2,000 and still pulling back then. I think we could even see a possibility of Ethereum soaring past the $2,000 mark. Right now, my prediction and belief is that the proof of stake Ethereum or Ethereum 2.0 is going to triumph in the long term, clearly, without a doubt. But even in the short term price volatility, we could be seeing a little bit more pain. For years, people have been banking on this Ethereum upgrade, which has been largely considered a significant improvement for the entire ecosystem. If you happen to have forgotten about the benefits of the merge, let me just lay it out real quick. This is going to greatly reduce Ethereum's energy consumption, making it more environmentally friendly friendly. We're going to see reduced gas fees in the long term, reduced transaction costs in the long term, reduced Ethereum's issuance by around 90%, making it deflationary, and it can also provide stakers the ability to earn a yield for their holdings going long on Ethereum. For me, when it comes to investing, I keep a long-term mentality on my assets, and if I was going short, I'd be considered a trader, and I could just go to the casino to do that as well. Regardless though, I want to hear your thoughts on what you think is going to happen with the upcoming merge. Do you think this volatility could set us up for something big, or do you think this could punish Ethereum and push it down even lower? Now, if you guys did enjoy today's update, don't forget to drop a like down below, subscribe to the channel like the usual, and check out the links down below in the description. Also, guys, I'm doing like a little newsletter, like a Sunday weekly newsletter. We're going to be coming out with some of the major market updates there. I'll share with you guys some more channel news, some little side hustle stuff I'm seeing, or just give you guys some updates too happening within my life. I know we got this YouTube channel, but I figure we also create this newsletter too, just so you guys have another opportunity to hear my thoughts on just what's ever happening in the world. If you guys want to sign up for that, the super cool newsletter is linked down below in the description of this video as well. On top of that, if you guys want to check out iTrustCapital, go long on your crypto, invest in it tax-free. The link for that will also be down below in the description. With my offer too, you can find yourself earning a free $100 after signing up, placing a little bit of money in there within 30 days. Guys, when you're investing into crypto, trust me, if you're going to make bank on it, please make sure you optimize the way that you pay your taxes. Use the link down below in the description for iTrustCapital. Check that out there. Now that is going to be it. Thank you all so much again for watching today's video. Have an amazing weekend. The secret word, I know I haven't forgot it there. It's actually the editor, Ben. My editor, Ben, is amazing. We've taken many trips. Wish him a happy birthday in the comment section of this video. That is going to be the secret phrase word for this episode. Thank you all so much again for watching today's video, and I'll see y'all soon. Peace.